Hello students, let's look into the next question under the retirement of a partner. Following is the balance sheet of Anu, Manu and Vinu who are sharing profits and losses in the ratio of 3 is to 2 is to 1. And as on 31st March 2020, so this is the balance sheet that they have given us. Anu retired on the above date and the following adjustments are required. Anu's share of goodwill of rupees 15,000 is to be created and written off immediately without opening goodwill account. Appreciate buildings by 10% and machinery value reduced by rupees 2,500. Reduce provision for bad debts by rupees 1,000. Provide compensation to workers rupees 2,300. Interest on bank loan at 15% due for 4 months. Anu is to be paid rupees 10,500 immediately after her retirement and the balance through loan account. Prepare revaluation account, partners capital accounts, opening balance sheet of the reconstituted firm. Well, we understand Anu, Manu and Vinu are partners. Profit sharing ratio being 3 is to 2 is to 1, which is nothing but 3 by 6 is to 2 by 6 is to 1 by 6. Anu's share of goodwill rupees 15,000. So it is not firm's goodwill. The sentence is very clear. Anu's share of goodwill rupees 15,000 is to be created. And the same goodwill is to be written off immediately without opening goodwill account. So this is the fourth category of goodwill treatment which we need to follow. Here, this 15,000, so without mentioning the goodwill account, this 15,000 is to be created and shared among the remaining partners. So who are the remaining partners? Manu and Vinu. What is the profit sharing ratio? It is 3 is to 2 is to 1. So if Anu is retiring, Manu and Vinu's share is 2 is to 1, which is nothing but the gain ratio of the continuing partners, written as 2 by 3 is to 1 by 3. So now this 15,000 is getting distributed in partners capital account on the credit side in the gain ratio, which is 2 is to 1. And the same thing is to be written off immediately. So writing off the goodwill is will reflect on the debit side of the partner's capital account. Again, the distribution will happen in the gain ratio. Appreciate building by 10%. So on buildings, you need to calculate 10%, which is nothing but the increase in the value of asset. Machinery value reduced by rupees 2,500. So they have directly given us the reduced value of machinery. So write it directly in the revaluation account. This is reflecting the decrease in the value of asset. Reduce provision for bad debts by rupees 1,000. Reduce provision. There is already a provision of rupees 3,000. They are saying reduce this 3,000 by rupees 1,000. So what is happening? Our debtors is increased by another 1,000. So show this 1,000 in your revaluation account on the credit side. Provide compensation to workers rupees 2,300. Now you need to understand compensation to workers is nothing but the pay or the medical facility that is being given or provided by the company to its workers to cover up the loss in wages due to accident, ill health and many other things that would happen in a business premises. So hence this is being created by the company. So therefore we will show compensation to workers rupees 2,300 in revaluation account on the debit side, nothing but an increase in the value of liability. We will show the same 2,300 in the new balance sheet as a liability. Interest on bank loan at 15% due for 4 months. So the bank loan is 14,000. On this we need to calculate 15% interest first, and this loan is not being paid by the partners from past 4 months. So the outstanding interest on bank loan is 4 divided by 12. Again, an increase in the value of liability. Anu is to be paid rupees 10,500 immediately after her retirement and the balance through loan account. Now, Anu is retiring. So Anu's amount need to be settled. So what they are saying is immediately the partners are going to pay 10,500. Now when we prepare Anu's capital account, that is partner's capital account, we will get the amount. We do not know what is that amount. So I will assume it to be as this minus immediately we are going to pay 10,500. So we need to find out what exactly is this balance, and this balance is being treated as Anu's loan amount. Now please remember students, 10,500 is paid through cash. So therefore you need to reduce. So minus 10,500 need to be reflecting in your new balance sheet. Likewise, the balance amount which is treated as loan again will reflect in the new balance sheet on the liability side. So in your revaluation account, point number 2, 3, 4 and 5, in case of partners capital account, we need to distribute general reserve, then the capital of the partners and the profit and loss account. General reserve and profit and loss account distribute in 3:2:1 ratio, followed by treatment of goodwill without opening goodwill account. And point number 6, which we will be showing for the settlement of amount due to the retiring partner paid immediately, and to find out what is the balance of amount that is treated as loan. Preparation of new balance sheet. Okay, we will be writing creditors as it is, there is no changes. Bank loan, we will be showing the amount of interest plus which is due from past 4 months. General reserve already distributed, so do not write it. Continuing partner, Manu and Vinu's new capital you need to find out. Anu's loan amount you need to write. Profit and loss account already distributed. Cash 18,000 minus 10,500. No changes in stock, write it as it is. Machinery is reduced by rupees 2,500. Sundry debtors, there is provision which is being reduced by rupees 1,000. So therefore minus 1,000 on provision for doubtful debt. So what is the amount that you are going to get? 3,000 minus 1,000 is 2,000. No changes in furniture value, write it as it is. Land and building is actually appreciated by 10%. So therefore we will be showing that 10% increase in the value of land. And preparation of revaluation account, the first item is appreciate building by 10%. So written on the credit side as by buildings account. The value of building is 45,000. 10% on that is rupees 4,500. Machinery is directly reduced by rupees 2,500, written on the debit side. Provision for bad debts is to be reduced by rupees 1,000. So provision for bad debts written on the credit side as rupees 1,000. Provision for compensation to workers is rupees 2,300. While explaining the question, I have stated regarding the compensation to workers, how it has been treated as a liability. Write the amount 2,300. Next, interest on bank loan. Bank loan amount is 14,000. On this, first calculate 15%, followed by this interest is due from past 4 months. So therefore 4 divided by 12, the amount being 700. Now let's check the amounts on debit and as well as on credit. So debit amount is rupees 5,000 500. In case of credit as well, we get 5,500. The amount remains the same. Let us write it as it is. 5,500, 5,500. There is nothing to reduce. So it is revaluation, no profit, no loss. Of partners capital account. First and foremost, let us bring down the capital of the partners written as by balance being brought down. Anu's capital amount 30,000, Manu's capital amount 25,000, Vinu's capital amount 25,000. Let's distribute general reserve in their profit sharing ratio. Reserve amount is 15,000 into 3 by 6, 7,500. 2 by 6 is 5,000. 1 by 6 is rupees 2,500. We have profit and loss account. Let's distribute this again in the profit sharing ratio. So 6,000 into 3 by 6, 3,000. 2 by 6, rupees 2,000. 1 by 6, rupees 1,000. We have solved revaluation account. There is no profit, there is no loss. So there is nothing for us to write in partners capital account. Remember this, student. Following point number 1, Anu's share of goodwill is 15,000, which need to be created and written off immediately without opening the goodwill account. So what is Anu's share of goodwill? It is rupees 15,000. What is the gain ratio of the partners? It is 2:1. Nothing but 2 by 3 is to 1 by 3. So how do we write this? The creation of goodwill without opening or showing goodwill account written as by Manu's capital account. Manu's share of goodwill is 15,000. Manu's profit sharing ratio is 2 by 3. Written in Anu's amount column as rupees 10,000. Next, by Vinu's capital account, Anu's share of goodwill is 15,000. Vinu's share is 1 by 3. The amount is going to be rupees 5,000. This is how we are treating the goodwill without mentioning the word goodwill. So this is the fourth category of goodwill treatment. Now how do we write off the goodwill without using the word goodwill? On the debit side, to Anu's capital account, goodwill written off, the same 15,000 is shared between Manu and Vinu in the gain ratio, which is 2:1. So 15,000 into 2 by 3 is rupees 10,000. 15,000 into 1 by 3 is rupees 5,000. So this is how we distribute and write off the goodwill without opening goodwill account. I hope I am clear. Let's do the balancing starting from the first partner Anu. Nothing on the debit side. On the credit side, if we add, the total amount is going to be 55,500. Let's write this on both the sides. There is nothing to reduce again. So 55,500 is the amount due to the retiring partner Anu. Now in this 55,500, we are going to pay immediately 10,500. So what is the balance amount? Which is nothing but rupees 45,000. So let's write it as to cash account rupees 10,500, which is paid immediately, to Anu's loan account rupees 45,000, balance in figure. The next partner is Manu. Manu's debit amount is rupees 10,000. On the credit side, amount is rupees 32,000. So let's write 32,000 on both the sides. Minus 10,000, we will get 22,000 written as to balance carried down. Bring down the same amount, rupees 22,000. Next partner is Vinu. On the debit side, amount is 5,000. Credit side amount is rupees 28,500. So we will write the highest amount 28,500 minus 5,000, we will get 23,500. Let's bring down the same amount. So we need to remember, in the new balance sheet, in the cash account, reduce 10,500. In the new balance sheet, owner's loan to be written on the liabilities side, and the capital of the continuing partners to be reflecting in the new balance sheet. Preparation of new balance sheet as on 1/4/2020. On the liability side, the first item is creditors, no changes, write the amount as it is. Bank loan is 14,000. There is interest on bank loan which we have calculated. Add the amount 14,700. The capital of the continuing partners together is rupees 45,500. Retiring partners loan amount is 45,000, and there is workers compensation rupees 2,300 treated as a liability. On assets, cash amount is rupees 7,500. Get 7,500 because 18,000 is the balance amount minus 10,500 which is paid to Anu immediately. Stock, there is no changes, write the amount as it is. Machinery amount is 20,000 which is reduced by rupees 2,500, 17,500. Debtors amount is 35,000. Provision for bad debts is 3,000 minus 1,000 which is actually reduced. So it is 2,000. Debtors amount is 33,000. Furniture, no changes, 15,000. Land and building value is 45,000 which is appreciated by 10%. So the final value is 49,500. So let's check the totals on the liability side, which is going to be 1,47,500. Likewise, on the asset side, the total is going to be rupees 1,47,500. So with this, we complete the preparation of the new balance sheet.